You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody, that music means it is Education Wednesday. It is time to tackle your burning options questions here on Options Bootcamp. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the aforementioned network. Reminding you, if you just listen to Options Bootcamp, I know a lot of you like to go straight for the jugular, straight for Options Bootcamp. You're missing out on a whole bunch of other fun stuff on the network. So head on over wherever you get this and subscribe to the full network. You'll get pretty much a couple of shows a day. We will not keep you wanting for options-oriented content. And it runs the gamut from volatility to advanced trading to asset management type strategies to futures options, you name it. It's all in there. Crypto, interviews, a whole bunch more. Of course, wherever you're getting this, make sure you keep rating and reviewing. It does help new folks discover the show. We do appreciate it that you appreciate us. And, of course, keep those questions coming, too, especially on a day like today. We got a lot to answer, but we always welcome more. You guys really keep us in tune with what you guys want. If you don't hit us up, we don't know what you want. So hit us up. A lot of places to do that at Options on most of the major platforms. Questions at theoptionsinsider.com also works if you want to go the old email route. Smoke signals, it all works. Hit us up. We do love to hear from you. We also occasionally like to hear from this other guy, Mr. Dan Passarelli, a.k.a. the founder of Market Taker Mentoring, a.k.a. the author of one or two options-oriented tomes, a.k.a. the black-hatted one himself. Mr. P, welcome back to Options Bootcamp. Are you ready to answer some questions, sir?
I love answering questions. Let's do it.
All right, let's do it. Here we go. A little bit of your mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody. Let's do it. Let's get into your questions. Like I mentioned at the top of the show, we do appreciate when you guys take the time out there to rate and review us, just like this person did, 1940 Ford. So maybe he's an old school fan of Ford. Maybe he's an older gentleman or lady out there listening. Either way, maybe he just has that car and he really likes it, a 1940 Ford. Doesn't say which model, just likes that Ford. Either way, 1940 Ford, giving us 5 stars over there at Apple Podcasts. He titles it Options Experts. He says, Mark and the guys at Options Bootcamp are very informative. I have learned so much. Everyone these days claim to be experts on one thing or another, but these gentlemen are the real deal. Well, thank you very much Mr. or Mrs. 1944, to everyone else who took the time out of your busy day. We know you're busy. You're out there slinging GameStop to rate us and review us wherever you get our shows. It really does help new people discover the show. And we appreciate you guys taking the time to do that. See, it's a mutual circle here, Dan, right? See, we all love each other here on the show, right, Dan?
Oh, yes. Oh, yes.
Except for you. You're kind of more, that's why I call you the black-hatted one. You're a little bit more bitter than I am. All right, let's keep rolling before Dan drags us down into his morass of bitterness. Next up, you guys clearly have the GameStop thing on your brain out here. We were talking, actually, this is when we were live on the show last week, Dan, or 2 weeks ago now when this show is going live, on our January 27th recording session. That's when the brokers were just starting to really shut down some of these opening transactions. And we were talking about right in the middle of the show, we said, is this the beginning of the end? We meant it as, is this the beginning of the end of the GameStop short squeeze frenzy, aka the rally to the moon? Sounds like Matt Davio was listening to that show. He says, he took it a different way. He says, it's but one of many things that this is the end. Bunch of exclamation points, and he put GameStop. So it sounds like, Dan, he's looking at it from maybe your perspective a little bit more, the black-hatted perspective, as this is a sign of the end times, sir.
Well, I'm not 100% sure that's how I'm looking at it, but...
Are you saying I'm more pessimistic than you now? Wow, the tables have certainly turned here. Let's keep rolling before people get even more confused. This is your buddy here, Dan. This is Anne-Marie Bain. She commented when we were talking about this on the show a couple of weeks ago, too. She just wrote in and said, wow. So even she was mystified, Dan, that brokers were starting to shut down those opening transactions, sir.
Yeah, I mean, it's it's strange. Why don't I just borrow the most famous phrase from last year? It's unprecedented times, Mark.
Yes, I think I said that once or twice last year, or maybe literally every single show for the entire year. I thought this year I'd get a break from that phrase. Perhaps not so much if January is any indicator. Next up, we've got Chris Thedinga. Sometimes we get a lot of questions, you guys might imagine. Sometimes if you guys have timely trading-related questions, we don't often have a chance to get to them in the most time. Maybe if you send them in, maybe if you flag them or something, we'll try to get to them quicker. We have a lot of shows, a lot of people writing in on all of them, as you might imagine. Sometimes things get put by the wayside. He writes in and says, hey, I've been learning from you guys for a long time. Well, thank you, Chris. Thanks for being a long time listener. He writes in and says, what do you think of the ATOS March calls? He did, thankfully, he wrote in to clarify after. He said, I'm thinking of buying a March $3 call. Their COVID nose spray may be coming on the 26th. If you're wondering, listeners, the stock is ATOS Therapeutics. I pulled it out right before the show, ticker symbol ATOS. Dan, this came in, I believe, a week and change ago. And let's just hope that our friend here bought said calls. He sent in a screenshot. At the time when he sent this in, the stock was $187. He wanted to know if we thought he should buy the March $3 calls for 30 cents. Well, I'm going to go with the magic of hindsight now, Dan, because the stock is trading $3.20 right before showtime. So I'm going to say, yeah, I hope you bought those. What do you have to say here for Mr. Atos, or I should say Mr. Chris, who's asking about Atos, and everyone else who wants to write in with timely trade-related stuff, Dan?
Well, I mean, it's high volatility. I don't know. I mean, a lot of times when it's something limited risk like this, and look, unfortunately, this is the first time I'm hearing of the stock. I wish I heard about it a while back, I guess. But at this point, who knows? Maybe the play's in. But when you're buying these stocks, and so a week ago, this was at $1 or 80 cents or something.
$1.87. So it's almost doubled.
Oh, $1.87. I mean, look, man, $1.87 is an option. It just doesn't necessarily have an expiration date. So, I mean, I don't know. Like in situations like those where the vol's so pumped so high, I just like to buy the shares. I mean, I know this is an option show and all, but
Yeah, I'm definitely down with that. I'm not a huge fan of options on sub $5. Some people even go up to $10. I remember our buddy, the Viceroy on the Option Block show, used to wag his finger at options on names below $10. In this case, he would have done pretty well on the stock. He also would have done well on the option. Looking right now, Dan, those March 30s are trading for $1.10. So I'm sure they were higher in the intervening period. So you probably got about a 4-banger if you bought the call. So not bad. Would have done all right. Again, I'm with Dan. I'm not a huge fan of loading up on high volatility out of the money calls in these biotechs. But if you have a driving reason to do it, on the other hand, yeah, like Dan says, $1.80 at the time. Not going to break the bank. Again, we don't know what your count is, but not going to break the bank to get a few shares there as well. You got downside risk to that as well. You got 30 cents here. You got $1.80 there. So you can do your math. That would have worked out, but this is the rare scenario. This is kind of like the GameStop thing. The GameStop thing could make you argue for buying 1,000% out of the money implied volatility calls because it could have actually worked out. It's insanity. But in this case, hopefully, write into us, Chris. Let us know how you fear, what you decided to do, and hopefully you're sitting on a pile of money, which is what we like our listeners to do. And then you could go use it wisely. Don't just put it back in the Robinhood machine and have it sprint out. Maybe buy a book on options from Dan or something like that, or use it. Maybe take your family out for dinner. Do something fun like that. All right. Or maybe these days, not maybe out, maybe more order in for dinner. How about that? All right. Next up, we've got Grateful Dead. He says, we were talking about this on one of our programs this week as well. This has been an ongoing issue about GameStop. Why aren't they issuing billions of dollars in new shares? The market gave them a gift. They drove their stock up from about $5 all the way to nearly 500. So you're getting 100x in your stock. You probably want to take some of that. This is a struggling retailer. You have a chance to get capital, absurd amounts of capital. Take it. So we were kind of confused why they weren't. AMC is doing that. AMC took some of that capital off the table. GameStop, which is the kind of namesake for all of this frenzy, is not. A Grateful Dead chimed in on that, says, he agrees. He says, exactly. Why aren't they doing this? The only reason I could think of is that it would screw over Wall Street Bets buyers that are also future gaming customers. Well, if that's the reason that they're not taking a $1 billion plus lifeline for their company, because they think some Wall Street Bets people are going to come in and buy their games and or tchotchkes after all this is over, that would be the height of foolishness. That would be, you could argue at this point, they are not doing their fiduciary duty to their company and to their shareholders by not taking advantage of this to propagate their firm and support it. I'm sure there are other reasons behind the scenes. Maybe they're worried about being seen as taking advantage of this tremendous manipulation in the stock. But either way, the market gave you a lifeline. They should have taken it. That's my view anyway. Let's see. Reformed Trader here. Reformed Trader chiming in. This is another saying I say a lot, Dan. I just said it not too long ago. I like to say when things are crazy, I throw out the old Ghostbusters quotes of dogs and cats living together, mass hysteria. Reformed Trader here is obviously having some fun with me at that because he sent up. Our audience of the show likes to send in images. That's just what they like to do. He sent in, he actually shared a tweet with us of a GIF of a dog and a cat kind of playing together and kind of obviously being very friendly. And the tweet said, they said they were too different. They said it wouldn't last. And he sent it to us and he said, hey, dogs and cats living together. And he tagged us. So he wanted to just remind me of one of my favorite phrases. Yeah, I know I say it a lot, Reformed Trader, but thank you for sharing that with us nonetheless. This GIF has got a lot of views out here. So folks obviously like happy images of dogs and cats living together here. All right, Dan, more conspiracy stuff afoot, so put your black hat on. This one comes from Michael Riley. This is in regard to the folks out there. He shared with us an article from CNET entitled "Reddit and Elon Musk Made GameStop stock, say that 5 times fast, jump even more in after hours." And he writes, Musk and Redditors stick it to the shorts and SEC simultaneously. The exchanges and SEC are a joke. And he decided to share that with us, Dan, as well as the SEC and NASDAQ. So what are your thoughts on the dogs and cats living together? This guy thinking that GameStop is not issuing shares because they're afraid of Wall Street Bets people not buying their tchotchkes. And this other guy here saying that the exchanges are a joke in light of all this Musk madness, sir.
Well, dogs and cats, I mean, my dog is 6 pounds, so I'd be afraid to put her around cats. They'd kick her ass. So so there's that. And she's a big wimp, but I love her. As far as, I mean, I don't know, as far as this comment here, I didn't read this article. I mean, I don't know. Hey, man, look, I'm open-minded to listen to what anybody has to say. But I think things, except for the senators chiming in and just saying ridiculous stuff to pander to their bases, I don't know. This is playing out in a fairly normal way under the circumstances as far as regulation goes. Nobody's having a big knee-jerk reaction. Is anybody really getting it stuck to? I mean, look, I don't feel sorry for the short sellers. Like, I'm a trader, man. Like, you make a bet and you live with it. I also don't feel sorry for, Redditors.
Yeah, it is crazy times out there. We've got some more. Hope you like more in the tinfoil hat category here, Dan. We got a few more here. We've got on our poll we did last week, the one with Schwab chimed in on. We asked you guys, are the brokers doing the right thing by limiting your transactions? You guys chose overwhelmingly about 75% no, my money, my rules. Surf City chimed in on that to say it's only the right thing if you consider protecting hedge funds the right thing. So obviously he's buying into the conspiracy theories out there that the brokers did all this stuff to protect the Melvins and the Citadels of the world. Nashonomics also on the conspiracy tip. We were talking about how Yellen was monitoring the GameStop market activity, and this person chimes in saying, any doubt that Robinhood and Interactive Brokers and others, Fidelity and others, are all magically limiting one stock only based on Citadel's orders. So a lot of folks subscribing to that theory there, Mr. P. All right, next up. Why do you guys have thoughts? So many thoughts. Holding the bag. He also chimed in on our poll last week where we said, do you think the markets should be structurally different for how the money calls as a result of this? About 74% of you said, no, this is a joke. He responded to this saying, no, he thinks this actually is a paradigm shift like Black Monday. Dan, that kind of ties back in to the poll we have live right now. Do we think this is effectively what he says, a paradigm shift? Are you with our listener here, holding the bag, sir, that the GameStop frenzy is a paradigm shift for the market, sir?
No, I mean, not yet. It's just one of these little things that happens. I mean, hey, man, if all the stuff that's happened over the last 15 months, like extreme things that change the world, and people don't raise an eyebrow about some of them that they should, making a big deal about this at this point. I mean, it's just this stock that went crazy. I mean, it's a pretty extreme example. I don't think I've ever seen anything like this extreme amount in my life. But I mean, still, a couple of stocks that went crazy for what I think is probably going to be a short period of time, or at least right now it is. And if it's a long period of time, then I might be with them. But right now,
let's see right now. GameStop, by the way, as we're recording this, listeners, at $98, so shy of that 100 level everyone's been watching, up about $5.50 as of right now. But wait 5 minutes, that number will change quite a bit. All right, also chiming in on that poll we had about should we structurally change out of the money calls going forward. We had Sam Zai chiming in. He said, I think fundamentally it is the hedging mechanism of the market makers that drives the stock much higher, and then the short squeeze just adds more fuel on it. I think it makes more sense to have rules for more sustainable market-making operations. Also, changing out of the money call prices will impact not only people buying calls, but also people selling covered calls are having to close their covered call positions, which is quite unreasonable and also perhaps impractical. Yeah, I'm with you. I think Dan's with you on both of them. I'm not sure about the more rules for market. It's kind of hard to, you can't really blame the market makers for this. You're right that the gamma effect was a huge accelerant to this. So the short selling, the short squeeze really kind of kicked it off. That was the catalyst. What really added fuel to the fire, though, was all these options that the masses were buying, a lot of them short-dated, high-gamma options that the market makers had to keep selling and selling and selling. Guess what you have to do if you're selling lots of options, a.k.a. you're selling lots of deltas. You have to buy those deltas back. Where do you do that? You do that in the stock market. So the market makers, in order to continue operations, remember, they don't want directional risk. They don't want your directional risk. They need to hedge that off so they could function. And so they're doing their job. They're doing their function. More rules. I don't know if they're rules I think it's more a question of the whole reg show issue being enforced, that was a problem. That kicked the whole thing off. But market makers need to have that exemption from short selling just to function. Otherwise, none of this, no one could have bought any calls from them because they couldn't literally hedge them. Those markets would have been absurd to begin with. So I think go easy on the market makers. They're already a pretty damaged bunch out there. But you're right. The changing covered calls going forward structurally, it's not practical. It may sound nice. People like throwing that idea out there, but it's not the most practical of things out there. All right, let's go to this one here from a regular listener here, Dan. This is Theodore Domzowski. I believe he's our food guy. No food picture this time. He says, thanks. You guys are great. Great shows on what is going on with GameStop. I know I've been slacking with the food picks. Yeah, he is our food guy. But I made an amazing chicken tikka masala. Unfortunately, the pics look like a dog's dinner or a hamburger helper, so I didn't send them in. Well, that explains why there's no food photo here, Dan. He goes on to write, my question today is about what happens overnight. When I wake up to a gap, I rejoice and say the gods of the street have smiled upon me. I am truly a professional at this. But when I wake up to a gap down, I say, why are these fat cats ripping me off? Is this based on overseas trading or based in the futures market or both? Well, yes, the answer is both. Mr. P, regale for our friend here, Mr. Theodore, a.k.a. the food guy. What the heck goes on overnight, sir?
Yeah, so there's trading overnight, but there's a couple of things, and the market of course closes for brief periods now and then, and the weekends. But you have to consider that these are all assets, and from the last show we talked about the price discovery process, which is extremely important. That's why the markets exist. Like all these assets, companies can their value can change overnight. And typically they don't change a whole bunch, but some enough to create a gap. And, maybe that's, earnings reports, that happens all the time, but, other things too. And so when the perception of the value of a company changes, like there's trading at night, but you have to keep in mind, it's not as liquid. Like, I feel like you can't really trust the nighttime prices so much. I think they're great if you're trying to get out of something because you can get lucky because the swings can be more wild and random. But yeah, then when the market opens, if there's a gap, it's because the perception of the value of the company has changed, or at least, I don't want to sound like I'm naive here. That's the economic theory. But there is some reality to that for sure.
Yes, Ted, the fat cats are ripping you off.
Yes.
Yes, that's exactly what it is. It's a conspiracy theory 101. Your dad mentioned it. There are things obviously trading 24/7 out there. The markets hand off to each other. There's Europe out there. There's Asia out there. And they trade on their own hours with their own products. But the major indices, of course, all intersect. And you're going to see if there's a big sell-off in Asia, it's probably going to lead to sell-offs in other markets and vice versa. And, of course, you mentioned futures and overseas trading, that's kind of the same thing because the futures are trading pretty much, most of the futures are trading out there are going to trade close to 24/7. There's a few breaks here or there, but the major index futures, of course, are going to be trading around the clock. They're going to go from U.S. hours to overseas hours. That's kind of how they work. There's probably more volume in the U.S. hours, but these products are getting an increasing percentage of their volume in the after hours than what we would consider, the European or indeed the Asian hours as well. Listen to our TWIFO show. We break that down a lot on that show. That's a growing amount of volume for these U.S. exchanges and U.S. products as in the traditional hours of Europe and Asia right now. In fact, there's a great report. We broke it down a little bit over there on the TWIFO program, but check it out if you're interested in all this kind of stuff. And anyone else who is listening, the folks at the Futures Industry Association may say, oh, wait a minute, that's scary. I don't want to do futures. I get it. But check them out because they put out a report every year breaking down the entire globe's volume from a derivatives perspective. So options and futures all around the world. Every exchange, every traded product you could think of, it's all lumped in there. It's pretty fascinating stuff. You can see what the rest of the world is really trading, how much volume goes up on some of these other exchanges you may never heard of before in these obscure products, or like the Kospi or Shanghai Rebar futures, all these weird things that go up and do a lot of paper. And where the growth is coming from, spoiler alert, was equity options last year and equity futures that drove the lion's share of all the growth out there. But it's fascinating stuff. You can see where all the trends are coming and ebbing or flowing. So if you want to get into this more a little bit more detail and see where things are actually trading, I encourage you to check out that report from the Futures Industry Association. It's just called the Global Derivatives Report there for 2020. All right, Mr. P, that music means we've come to the end of another All Questions Considered. Hit us up. Get those questions in if you want to ask us stuff. If for some reason we can't get to it on Boot Camp, we'll make sure you're routed in a timely fashion to some other show. As you might imagine, we have a pretty aggressive flow of questions these days. We like to make sure you guys have your voices heard here on the network. So if you have a question, hit us up. You know where to find us. And of course, while you're at it, if you like what you hear, keep rating and reviewing. If you don't like what you hear, you can blame Dan and still give us a good rating out there. But before we go, Mr. P, if folks are intrigued, maybe they want to check out one of your books or check out one of your mentee sessions, where should they go? What should they do?
Yeah, if you're interested in my books, the best place to get it is Amazon. I believe that those are the best prices that I've seen. I don't set that. The publisher does, and Jeff Bezos or his successor soon set those prices. But go over there. You can get a pretty good discount on it. And I'd love to have you read one of those.
And what's cooking in the land of MTM, sir?
Oh, boy, lots cooking. We're actually working on a very, very exciting online massive event, but I cannot lift the curtain on that just yet. Probably about a month before we can. But when we can, it's going to be really great. I'm excited.
All right. An online massive event. Look forward to that. And on behalf of Mr. P, a.k.a. the black-hatted one, and indeed myself, the much cooler white-hatted one, even though I'll go for the red lightsaber, it is cooler than green. I want to thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in your questions and comments. Keep them coming. We'd love to hear from you. And we'll see you back here next time for another episode of Options Bootcamp.
This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.